Today is August 5th, 2025. The price of U.S. crude oil is in the news. It has fallen to around $65 per barrel. This is a big change from its recent highs. Many traders and investors are paying close attention. This drop is not just a one-day event, it is part of a bigger trend we have seen for a few weeks. The market is feeling nervous. People are asking if the price will fall even more. This uncertainty makes the market very active. Everyone wants to know what will happen next. This downward movement has a special name. We call it a bearish trend. A bearish trend is like a big bear pushing something down. It means that prices are generally going lower over time. Experts believe this bearish trend will continue for a little while. They see signs that suggest more weakness. This is the opposite of a bullish trend where prices go up. Right now the bears are in control of the oil market. They are selling more than people are buying. This selling pressure is what pushes the price down. There are several big reasons for this bearish feeling. One major factor is weak demand for oil. Economies in some parts of the world are slowing down. When businesses are less active, they use less energy. This means they need less oil for factories and transportation. Another reason is the supply of oil. There is plenty of oil available on the market right now. When there is a lot of something, its price usually goes down. A strong US dollar also makes oil more expensive for other countries, which can lower their demand. So what does this mean for you? It means that the cost of energy could change. Lower oil prices can sometimes lead to cheaper gasoline at the pump, but for the oil industry, it means lower profits. For traders, it is a time of both risk and opportunity. They are watching every small price change very carefully. Understanding why the price is falling is the first step. It helps everyone make better sense of the headlines. The story of oil is a global one, affected by many different forces all at once. In trading, some price numbers are more important than others. We call these key levels. These are prices where the market has reacted before. For U.S. crude oil right now, one very important level is $66. This price was a previous support level. Support is like a floor that holds the price up, but the price broke below this floor. Now, $66 has become a resistance level. Resistance is like a ceiling that can stop the price from going back up. If oil cannot climb back above $66, the bears stay in control. If the price continues to fall, the next key level to watch is $64.70. This is another area where buyers might step in. Think of it as the next potential floor. If the price falls to this level and stops, it could be a sign of a pause. But if it breaks through $64.70 easily, it shows the bears are very strong. After that, the next important number is $64. This is a big round number. Markets often react to these types of numbers. A break below $64 would be a very bearish signal for many traders. Another critical level below that is $63.45. This was a low point from a few weeks ago. If the price reaches this level, it will be a major test for the market. Will buyers finally come in and defend this price? Or will the selling pressure be too strong? A break below $63.45 would confirm that the downtrend is powerful. It would open the door for even lower prices in the coming days. Each of these levels acts like a step on a ladder. Watching how the price behaves at each step tells us a lot about market strength. On the other hand, what if things change? The market can be unpredictable. If the price were to show strength and climb back above $66, the story would change. This would be a bullish sign. It would suggest that the bears are losing their power. A move above this resistance could give buyers confidence. It might signal that the recent fall was temporary. Traders would then start looking at higher price targets. This is why $66 is the magic number to watch for any sign of a turnaround. Traders use special tools to understand price movements. These are called technical indicators. They help us see the story on a price chart. One popular tool is the Relative Strength Index, or RSI. The RSI measures how fast and how much the price is changing. It is a number between 0 and 100. When the RSI is below 30, it suggests the asset might be oversold. This means it has fallen too much, too fast. Right now, the RSI for oil is low, showing strong downward momentum. This confirms the bearish trend is in place for now. Another useful tool is the moving average. A moving average smooths out the price data to show the trend more clearly. Imagine drawing a smooth, curved line through the jagged price chart. We often look at the 50-day and 200-day moving averages. When the price is trading below these lines, it is a bearish signal. Currently, US crude oil is well below its 50-day moving average. This tells us that the short-term trend is down. The price is also below the 200-day moving average, confirming the longer-term trend is also weak. Then there are Bollinger Bands. Think of these as two lines, one above and one below the price. These bands create a channel that the price usually stays inside. The bands get wider when the market is volatile and narrower when it is calm. Right now the price of oil is touching or hugging the lower Bollinger Band. This is a classic sign of a strong downtrend. It shows that sellers are pushing the price lower with persistent force. It is another piece of evidence that supports the bearish outlook for oil. These tools do not predict the future with 100% certainty, but they help traders make more informed decisions. By combining the signals from the RSI, moving averages and Bollinger Bands, a clear picture emerges. All three are currently pointing in the same direction, down. They all confirm the bearish trend that we are seeing in the oil market. For beginners, learning to read these simple signals is a great first step. It helps you understand the language of the market and see the trend for yourself. So, what should we look for in the next few days? The market will be watching for confirmation of the trend. If the price of oil stays below the $66 resistance level, the bearish case remains strong. We would then expect to see a test of the lower support levels we talked about. Watch for a move towards $64.70 and then possibly $64. The speed of the move will be important. A slow drift down is different from a sharp sudden drop. Fast moves show that sellers are very aggressive and confident in their position. Economic news will play a big role in what happens next. Keep an eye out for reports on oil inventories. Every week the U.S. Energy Information Administration releases data on how much crude oil is in storage. If the report shows that supplies are building up more than expected, it is a bearish sign. It means there is less demand. Conversely, if supplies drop surprisingly, it could give the price a boost. Also, watch for any major news about the global economy, as this directly affects the demand for energy. What could change the trend? A surprise event could always shake things up. For example, unexpected geopolitical tensions in a major oil-producing region could cause supply fears. This would likely send prices higher very quickly. A sudden weakening of the US dollar would also help support oil prices. If the dollar falls, oil becomes cheaper for buyers using other currencies. This can increase demand and push prices up. Traders should always be prepared for the unexpected, as the oil market is famous for its volatility. In summary, the path of least resistance for US crude oil appears to be downward for now. The key is to watch the important price levels and technical indicators. Will the price break below the support at $64.70 and $64? Or will it find the strength to reclaim the crucial $66 level? The answers will come from the price action itself and the upcoming economic news. For anyone interested in the market, the next few days will be very telling. Stay informed and watch the charts closely.
This is for information purpose only, not a financial advice. Always assess risk before trading. Stay with us. Please subscribe our channel. Thanks for watching. Stay tuned.